Hi there, it's Chris Cillizza, Senior Advisor at the DGA Group, and I wanted to give you an update on where things stand on trade and tariffs as we enter the middle of April. So, Donald Trump obviously has paused most of the tariffs across the board with many of American trading partners, but he has not paused tariffs with China. In fact, China has over 100% tariff on goods, American goods coming into their country. The U.S. has an over 100% tariff on Chinese goods coming into the United States. I do not think it is too early to say this is at least the beginning of a trade war, and it may well we may well be in the middle of a trade war. What does that mean? Well, I think Donald Trump, from a political perspective and from a sort of global economic perspective, would be best served to declare victory and move on. Find a way to make a deal with China of some sort, say that we got the better of the deal, and move on. As he is making deals, and we expect these things to come mostly in May, June, and July, with all of these other countries, they said 130 countries have come to the table wanting to make deals with the United States. Because I think an extended trade war with China will not benefit Donald Trump. It injects exactly the opposite of why he was elected. He was elected in large part to lower the cost of everyday goods and to lower inflation. Well, this week, Jerome Powell, the head of the Federal Reserve, said that Trump's tariff policies will in fact likely lead to increased inflation, at least in the near term. That, according to most economists, is correct. So Donald Trump, if he keeps these tariffs in place, particularly on China, and especially if he goes, if this 90-day pause with all the other countries, if he goes and then puts more onerous tariffs on them after that, he will almost certainly raise prices on everyday goods. And that is a problem for him and Republicans politically, because it is the opposite of what he had promised to do. Will Donald Trump cut deals, especially with China? I think a lot of that depends on the personal politics here. Remember, neither Xi Jinping, the president of China, nor Donald Trump is hugely incentivized from a political perspective in the near term to look like they are the ones caving on this trade war. Xi Jinping wants China to be seen as a world power that stands equivalent to the United States and does not need to go hat in hand to the U.S. on trade, tariffs, or anything else. Donald Trump, having already blinked a bit on his reciprocal tariffs pledge, sort of pausing them and rolling a lot of them back, doesn't want to do that. Again, particularly with China, which I think he rightly views as the major American superpower rival in the next decade or two. The problem is the medium-term and long-term politics for both of those men is not great. Xi Jinping is dealing with a Chinese economy that is slowing. Donald Trump, as I said, is dealing with an American public that is losing confidence in his ability to effectively handle the economy. And not for nothing, the stock market, the Dow Jones Industrial Average, dropped 1,200 points on Wednesday and Thursday. That is not great for Donald Trump. It is not great for the markets. And I think they want more, companies want more certainty. Will he give it to them? It's always the $25,000 question when it comes to Donald Trump. He might say he will and then not. He might say he won't and then do. But I will be watching. So I think it's really China and the U.S. and how much short-term pain are they willing to deal with, and how much of their own homegrown politics are they willing to put aside to make a deal. Donald Trump would be best served to make a deal, but he doesn't always do what he would be best served to do. Thanks for listening. And as always, you can go to the DGA Group, not just for the what of things that are happening around the world and in the United States, but for the so what, why it matters, and the now what, where's it heading. Okay, everyone, take good care.